what we saw for the whole economy was a very hot economy and the Fed doing its very best to try to cool it off. I mean, throwing buckets of cold water on it over the last 6 months or even more.
In today's economy, more people than ever are looking to buy and sell businesses. But how do you do it? Welcome to the Deal Board, presented by Transworld Business Advisors. Straight talk about real deals and real people. Listen to stories, interviews, and expert advice to help your business sale, merger, or acquisition process. Now, here are your business exit experts, Andy and Jessica.
Hey, welcome back, everybody, to a great episode of the Deal Board podcast. And why is it a great episode? Because we're going to talk about 2022 and what's going on right now in the economy. And it's all backed up by the stats that we've seen. And I wasn't surprised by the stats, Jess. There's a couple of reports out already, and we might have some differing views, but certainly not surprised at what's going on.
No, not surprised. I mean, I kind of feel like I'm not crazy, right? So we were just talking earlier that there's a lot of talk of recession and there's a lot of talk on the economy declining, but like we're not seeing it, right? So Andy and I were just saying, like, are we crazy? Like, are we just worrying ourselves into recession? But a lot of the stats we're going to talk about today kind of backs that up, is that the economy and really our market, businesses for sale in the small to mid-size arena, it's very stable. So we're glad to be back for the show. For those of you listening to this for the first time, we do these updates every single quarter where we update you on the previous quarter stats. This time we're going to do the previous year, right? Because we're talking about closed transactions for 2022 and just some overarching trends that we've seen during and throughout the year.
Yeah. And on just an overall view, right? 2022, busy year for Transworld, just crazy busy. And what we saw for the whole economy was a very hot economy and the Fed doing its very best to try to cool it off. I mean, throwing buckets of cold water on it over the last 6 months or even more. And so the first report that we wanted to go over was a report from Tagnify, which is a company that does a lot of business intelligence, and they have incredible, I mean, many reports. But this business economic report that we wanted to talk about basically talks about the overview of the battle between inflation and interest rates as they were trying to quell the growth somewhat.
Yeah. And I mean, like the two eyes, right? So on the inflation side, when we pull it to our market, obviously business owners have had increasing costs and they've had to keep up with increasing their prices to cover those costs, which fuels inflation. And then on interest, acquiring capital, acquiring businesses has just gotten more expensive. So like you said, Andy, the Fed's done their best to try and cool this off. But what Tagnify is saying is that between inflation and interest rates, it did not thwart economic growth. Actually, they're still seeing gains in real GDP across the macroeconomic environment.
Yeah, and while the markets have responded, so the bond market certainly suffered and the stock market suffered, but even since the stock market's the worst since the Great Recession, this is not the Great Recession. We have certainly not seen that. And so you're seeing that, even though the treasury yield curve is kind of inverted, but it really, COVID's kind of gone away for the most part. I mean, as China finally let loose on their COVID protocols, but they really can't track the virus like they used to be able to track the virus. So I think what you're seeing now is like everybody kind of coming out still, and the economy still growing, and we've seen some recovery of the job market. Even though we thought that the job market might get a little tighter and they were announcing layoffs, but we just had the first quarter report, or January report, and it was much bigger than expected.
Yeah, much bigger than expected. And I think everybody was expecting it to be a bad report because of all these announced layoffs and some of the bigger tech and banking companies, but not. So what Tagnify is saying still, and this is, going back to 2022, is that it's still a really strong job market and the unemployment rates are still equal to the low pre-pandemic rates. So if you look at these, they're like bright spots in this economic outlook. And yes, we're having inflation and increased interest rates, but it's not really quelling the economic activity to the levels that everyone is expecting.
No, the federal fund rate is over 4%, up from basically zero. We're still chewing on that. The Fed is probably going to raise it maybe once or twice more, but I think it was a quarter point last time. So I think the unemployment rate is then at an all-time low. But we are starting to see some companies laying off, and that's going to spur on the business brokerage community as well. We're going to see some more people buying businesses.
Yeah. So let's jump to with that, we'll jump to the next report that we want to reference. And BizBuySell puts together a really great insights report every quarter, and they just wrapped up their 2022 data, and they report on how the business for sale market is going. And they're specifically focused mainly in Main Street small business transactions. But they're reporting from 2022 that acquisitions are up almost 5% in 2022. And just to give everyone some background on this, especially this is the first time you're listening to the show, we've had record years. And when I say we, the small business sales community have had record years in deal volume from 2020 wasn't, a record year, but it was a very strong year, record year in 2021. And then to even be up from that in 2022 is just an incredible amount of deals done. BizBuySell is reporting just over 9,000 total transactions in 2022.
And if you look at their chart, and maybe we could put a link in the comments into the of the show, but the chart actually shows that it peaked in Q1 of 2022. So the business closed transactions peaked in Q1 of 2022, and over the next 3 quarters came down. So the fourth quarter, while it was still up quarter to quarter from the previous fourth quarter, down from the previous fourth quarter, it's still up from 2021 levels, right? So again, the 4 quarters of 2022, best year ever for Transworld. We'll talk about that in a minute, but for the industry as well. But BizBuySell says, hey, it's slowing down some, and the prices have come down, I guess about 3%, they said.
Yeah. Which, you know what, if you think about it, the cost of capital for buyers for acquisitions, if they're using loans, has basically doubled, right? In the last 6 to 8 months. So to see a little bit of a price suppression, I think would be expected. I think 3% is really nominal though. Right. We're still seeing very strong multiples. And again, if we go back historically, I don't know, what show was it, Andy, where we retracted our 2 times that we had to take the 2 times show away?
Yeah, we did.
Yeah, but we did because multiples and prices on small business sales are up overall from pre-pandemic levels. So instead of that 2 times average that we saw previous to the pandemic, we're seeing closer to 2.5. So coming down 3%, when we put it into perspective, it's very nominal, and we're still really in a good position for sellers.
Yeah, there's still a lot of money out there. And just to compare it to 2019, or in 2020, what was it? It's up a 19% gain since 2020, the number of transactions. And like you said, the hovering around 2.55, 2.53, and the revenue multiple went from 67% down to 65, nominal. So businesses are still selling, and they're selling for good prices. And we still see that anecdotally. I have like 3 buyers that called me in the last couple of days, wanting to engage with us for us to do a search. And it's just so hard to be successful with that. We told them, really, that's not possible at this point. You really just have to be engaged with us and work on finding a business that comes up for sale. Because the asking prices are still kind of going up, or still high, Yeah.
They're still high. It's still very much a seller's market. Now, look, and BizBuySell puts this out, as there are some pressures to watch out for. The 2 I's, again, inflation and interest rates, that could swing in buyers' favor. But the other interesting thing is too, and I'll say this anecdotally, is, BizBuySell said that seller financing is becoming more important in today's market. I've also seen it's become more desirable in today's market. I see a lot of sellers that are more willing or interested in seller financing in the rate environment that we are in today versus a couple of years ago.
Yeah, it says in the report that 95% of brokers think seller financing is important. Of course it is. It always has been. But like you said, it's going to be more important because as we've seen in times of high inflation and high interest rates, it is tougher to borrow, like you said, and you have to get creative. And the banks are going to even want to see in SBA loans, the seller participation increase.
Yeah. Yeah. So overall, I think they're saying, it's still a good market. They're seeing, some increased demand. It looks like on service businesses, restaurant demand has dipped, but that's typical. Restaurant demand increases and decreases based on cycles. But overall, like I still think we're seeing a very strong seller focused market in the years to come. And Andy, to bring it back to, yes, layoffs are a terrible thing in most environments, but when you're considering selling a business, layoffs are actually a good thing, right? Because a lot of those buyers, especially in the higher earning jobs that we're looking at being eliminated right now, those buyers are going to become business buyers, right? They're going to enter entrepreneurship through acquisition. So that's just going to even increase the demand we have for small business sales.
Yeah, and the baby boomers are finally going to come. So it is a good time to be a buyer, even though I said inventory's tight and it's tough to find. If you're looking for something like a very niche business, it's very tough to find. But if you're open and you're open to good ideas, 45% of owners say when they're coming to market right now that they are selling to retire. So, and so it is a good time. And, a lot of them are coming to market because they feel like we're in a recession. I think we talked about this last time, that it's almost good that, the baby boomers have it in their head that it's time for them to go because the best times have passed them. That is just opportunity for buyers.
Yeah. I mean, these are great businesses. Some of these baby boomers have owned their businesses for decades. And we're not talking like 10 years, we're talking like 20, 30, 40 years. And so you have a business that has that type of history and reputation. Those are huge opportunities for buyers. So that's about Tagnify and BizBuySell. Andy, let's talk about Transworld and what some of our metrics are showing us from 2022.
Yeah, it was just a big year. I mean, again, a couple of things. Number one, the Transworld network continues to grow. I mean, we added Saudi Arabia last year and in the Middle East. We added, I think, 20 to brand new offices at Transworld, 20 plus, and plus we, had 20 or 30 brokers in every single month over the year. So hundreds of people joined our network. With that, we saw the number of listings, even though we're seeing that listings are tough to get, the listing inventory, the number of new businesses we brought on went up 7%. In the fourth quarter, it was about even from the previous year. But we're up 7% year over year.
Yeah. So another really great year of bringing businesses to market, which is good to fuel that demand from the buyers. We also saw an increase in the average listing price. So, some of these businesses have been earning more money, one, but also are becoming more valuable. So overall, we saw an increase on the average listing price of 18% in 2022, with some spikes in some quarters and some bigger spikes in other quarters, but 18% on average overall.
That's not surprising. Businesses are valued based on the last couple of years of financials. So 2020 certainly being an enigma year, very difficult to pin a value on it at the beginning of 2020. 2021 happens. So now we have one solid year of financials. By the end of the year of 2022, now we have 2 solid years of financials. And of course, the prices are going to be better because people are feeling better about certainly the coronavirus being gone. And I think people are feeling pretty good about the prospects of businesses moving forward, even though interest rates are up and even though there's a recession, quote unquote, looming. You're seeing the prices go up by 18%. I would say that's a pretty good indication that most people don't think the recession is going to be that deep.
Yeah. And it also proves a point too, because the biggest spikes we saw in listing price was actually in Q3 and Q4, right? So now, and we said this when we were first talking about how do you value businesses from a pandemic year? And we said, once you get a year past it, 2 years past it. Now we're moving into like our third year past it. There's much more of a feeling of stability. And that's what you can see in the data. So
Yeah, and that average list price of coming over $1 million is where, things are these days. I mean, we do track the number of $1 million listings that we take. And again, that was up 20% year over year from 2021. Again, the prices might have been depressed at the beginning of 2021, but we're seeing a solid run of $1 million plus listings coming in over the year. Pretty stable across the whole year. The fourth quarter was a little light, but that happens with us because, Thanksgiving and Christmas kind of get in the way of everybody out there listing. But we're seeing it right into 2023.
Yeah. Yeah. So good year overall from a listings perspective, but let's talk a little bit about sold deals. So it's one thing to bring businesses to market, but like how many businesses are selling and what does that look like? And the good news is the stats on the number of sold deals is even better, right? So the percentage up of sold deals was 31% more than 2021. So year over year, 31% increase in number of sold businesses.
Yeah, I think that's a fewfold. Again, we brought more listings in, but not that many more listings in. What you're seeing is a maturing of a few things, maturing of our brand, us bringing in bigger, better listings. So they're being sold more often. And again, I think the marketplace just being able to package up the listings and be able to understand what business it takes to sell, what it takes to buy a business, and you're seeing a 31% increase. That is remarkable. I mean, really is remarkable.
Well, and we're not going to cover buyer stats today too, but we have in the past, and with the increase of buyers and increased interest in acquiring small businesses over really the last 18 months to 2 years has also fueled that, right? Because if we have more buyers coming to the marketplace, we're able to make more and better matches for those business sales as well.
So if the listing price went up 18%, what happened to the sale price?
It went up even higher? Is that? Yeah.
Yeah, a little bit.
Yeah, a little bit. Yeah. So it went up to 20%. So 18% on the listing price, but our average sale price went up 20% year over year.
Yeah, and interesting in the fourth quarter, comparing the fourth quarters of the previous years, 2021, 2022, it's up 15%. And that's pretty consistent to what we're seeing. And like, again, that solid increase in price of businesses being sold out there in the world. Again, we're doing, we don't have the stat here, but it's well over $1 billion worth of sales. And you're seeing these businesses, just go up in value as well.
Yeah. So Andy, what do you think all this means for the future of Transworld to come in 2023 and beyond?
I think 2023 is going to be a solid year. We do think, we keep saying, and you and I have talked about it, and Al and our leaders have talked about things cooling off somewhat, but there's really no indication of that thus far. In fact, January for Transworld, Florida was one of the record months that we've ever had. A lot of times that's because a bunch of deals that were supposed to close in December kind of drip into January when their CPAs finally wake up and say, wait, you're going to take ordinary income in December after you earned income all year long? No, no, wait a couple of days.
Yeah.
So they wait a couple of days and we got a lot of deals done. And so we have been talking to a lot of the bankers. The bankers are positive. They're working on ways to deal with the increased interest rates. In fact, we'll probably do a show on that, how best to buy business with increased interest rates. But I think, what we're seeing from the leaders out there, the New Techs, the Live Oaks, the Huntingtons, you can name some other banks that we deal with, Centennial. I mean, they are bullish on SBA loans. I don't see anybody getting out of the SBA businesses like we did in 2009 or 2008.
Yeah, it was interesting. We just recently had Live Oak in our office, and we definitely should do an update on a banker show. I agree. But one, they're not slowing down on lending, right? Their appetite's actually increasing for acquisition loans and SBA 7A loans. And then the other thing we asked them is like, hey, are you guys starting to see defaults on past loans or business? Because they get reports, they get audited financials from the businesses they've loaned to in the past every year. Like, what are the business financials looking like? And they said they look strong. Right. They're not having any default issues. They're not having any payment issues. And the reports they're seeing is that these small businesses are still producing strong P&Ls. So that all looks very good for the future of business brokerage, and more businesses coming to market with the baby boomers, better businesses and shape with more profit. And then you add on the fact that we've got some potential increase in buyer databases with some layoffs, and we've got a really dynamic market in front of us in the next year.
Yeah, I mean, just anecdotally, or even, I've spoken to a lot of hospitality businesses like restaurants out there. You can't get into a lot of restaurants if you didn't plan ahead. And you had I just had my birthday, and we're trying to get a table for 12 in any restaurant was like virtually impossible. I was calling around, had to pull a few favors, finally found a room that could take, a family. And it's been hard. And so these businesses that are coming available for sale, the reason why the bankers are encouraged, the reason why we're not getting defaults is because the economy is still very strong. There's still a lot of money out on the street. That money is not being called back for any reason. It's not like the credit defaults swaps that we had and all these issues that we had in 2008 and 2009. Those loans are still good. They're still trading on, the secondary market is still strong for these SBA loans. So the SBA lenders are going to still do it. And the increase in interest rate means that the banks can make a little bit of more money, and they're having record profits as we've seen in the stock market. So all these things, it just makes it that it is a good time to sell, and it's still a good time to buy. Your business should grow if you buy it now.
Yeah. Yeah. And it's all about, obviously finding the right business for you. If you're a seller, finding the right advisors, which we've tried to talk about on the show extensively. But Transworld's always here as a resource if you need any of those resources and partners as well.
Yeah. And to any of those people that got laid off, two things. Number one, if you want to buy a business, call us. And number two, if you want to do what we do, because it is a lot of fun, you should call us as well. Transworld's always hiring. I know a lot of our franchisees and offices across the country are looking for great intermediaries to help us, bring more businesses to market.
Always looking for great, talented people. And yes, if you're considering buying a business or trying to look for a job, I mean, we both failed at the whole corporate job thing. So we're not proponents of that, but we can't speak highly enough of owning our own businesses and what it can do for your professional and your personal future.
Yeah. And another note to buyers out there, and just as a general marketplace rule, it is hard to find a good business these days. It's just, there's a lot of noise out there. There's a lot of businesses for sale. I would just make the point that if your goal is to buy a business, you have to be committed to the process. We can help you, but you really have to keep your nose to the grindstone.
Yeah. So we hope this show was helpful for you today. We love bringing you our stat shows, love telling you what we see in the marketplace. Overall, just to recap our message, it's a great time to sell. It's a great time to buy. The economy, especially for small business transactions, seems in very solid shape for the year to come.
Yeah, give us a call.
Hey, Andy, do you know what time it is? It's time for our deal of the week.
Deal of the week. Sold.
Hey, welcome back, everybody. And we have longtime franchisee Marc Lazarus from Transworld Business Advisors of North Bergen?
South Bergen.
Yeah. South Bergen. All right. It was close. I should know, right next to my hometown. We were just talking about Verona, New Jersey. So, Marc, you just did a deal. It was an interesting deal. So why don't you give us a little bit of background?
Okay. So brought to me by a referral partner from a networking event. And it's an Italian restaurant. It's a large one, around 35 years. I had a double space in a very active strip mall. and they wanted to go to market. They were two brothers, and they were just tired. So I ran my numbers. It looked like about 800 SDE, and I put it at 2 million. And fortunately, I found somebody to take it at the 2 million. It was a unique company. They do, when they buy the company, they actually give shares to the employees, which is great for employee retention. I love the idea. And they add it over time. They add some of the employees, and they add not more employees. They will add more shares as the business grows. And it was a smooth deal for the most part. It ran into a couple of hiccups like all do, but we got it done, and everybody seems to be happy.
So it was about a $2 million deal, right?
Right.
Nice.
$2 million. And, nice commission. I'm very happy with it. Nice way to end the year off.
Excellent. Sounds like a great deal. Good deals for good people. So, Marc, what's the best way to get in touch with you if somebody else in North Jersey wants to do a deal?
Well, email's always good, ml@tworld.com, or my cell phone, which is 201-370-9600.
Great job, Marc. Good deal. Good deal for good people, it sounds like.
It was. Okay.
Excellent.
Thank
you
you
for coming on.
Hey, welcome back, everybody. And we have a very special guest, Jack Postregna from Credit Bench, the SBA arm of his bank. And Jack's been with us for many years. He's done many SBA deals. He is literally the expert, and we love working with Jack because he gets deals done. And so you're with a new bank. Why don't you tell us a little bit about that first, and then we can jump into our topic.
Yeah, I'm with BayFirst Bank. They're out of downtown St. Pete. They are a national lender, so they lend in all 50 states. We love lending into Florida, though, in our backyard, and being able to support not only really the Tampa Bay area, but the whole state of Florida. So we're about $1 billion in assets. So we're not a super large bank. We're not super small. And we go to all the conferences, obviously with Transworld, and support Transworld in every effort, not just only on the deals, but also going to the conferences and taking some of the lead sponsorship opportunities.
Yeah, and we really appreciate that. And you've done that over the years. So thank you, Jack. We are looking forward to our conference in May. This will air before then. And so we'll get some more testimonials from you at that point for sure. But
Great.
Let's talk about, we were talking about 2022 and the stats, and, it was just a bang up year. I mean, it was a good year for us, but obviously by the end of the fourth quarter, we just starting to see some headwinds. So tell us what your year was like and what you see moving forward.
We had a record-breaking year in 22. For Credit Bench and BayFirst, we're always a top producing SBA lender. In fact, we're actually nationally ranked right now, number 5 out of 1,700 active lenders. So here we are, this Tampa Bay community bank that has 600 employees, and we're up against the big boys. The Bank of America's, the Wells Fargo, Live Oak, Huntington. They're all up there with us, and so we're punching way above our weight class, but we're doing a great job. I mean, we just do a ton of volume, and we overservice not only our brokers who are our referral sources, but also our borrowers. And that's worked for us in the past, and it's going to continue to work going forward.
So, tell me about some of the deals in 2022. Were things changing through the year as the interest rates going up? Tell us what the borrowers were doing. Tell us what, you were doing at that time as the interest rates started to creep up.
So late 22, when the rates started to kind of creep up, we had 7 or 8 rate hikes.
We did.
In 22. So by the time we got to the end of the year, fourth quarter, we were already starting to see some challenges, as we're seeing some headwinds too now into 2023. The biggest thing that we've seen is with this inflationary environment, we're going to see rate hikes to prime, and that impacts our industry significantly in a number of different ways. First of all, the valuations. Okay, so a deal we looked at last year at 5 3/4, Andy, now it's at 10.5. Because prime has gone up so much. So we have to review the deal to make sure that, first of all, if it's going to value out, and second of all, our debt service coverage ratio numbers are going to be sufficient. So every deal that we pre-qualified last year, all of a sudden a new buyer surfaces, we're looking at those deals and going, man, I'm crossing my fingers. I hope it really works at double the rate of what it was last year. So I'd say that's those are some of the impacts of the higher rate environment. Now, keep in mind, we have our own portfolio of customers, right? And we service our customers even after the closing. Not all lenders do that. Some of them have, different sources that do it for them. We're married to those borrowers. So now with the higher rate environment, keep in mind, we have clients in our portfolio that were used to 5 3/4. Now they're at 10 1/4. So their payments have gone up. Okay. So we're starting to see kind of some headwinds with, borrowers in our portfolio calling saying, man, my monthly payment was not really what it was when we closed this loan. So,
right.
I mean, the good thing is that we hope that it, will hopefully stabilize, and then prime will come down so they can get back into some of those lower monthly payments. But yeah, those are, that's probably the biggest thing that we've seen. On the SBA side, we've seen some changes in how they look at deals or the guidance that they give us. They have really put a strong emphasis into letting us know that experience on these change of ownership transactions are super important. So the days of looking at transferable skill sets or maybe testing somebody out in a new industry, that's not happening anymore. Those days are long gone. Post-pandemic, they're wanting direct experience or us to be able to correlate their experience into that business that they're buying. So I've even had to get creative, Andy, with borrowers that are not making the cut on experience. And I tell them, I said, your resume, nothing says landscaping about your resume. Right. So do an addendum and let me know what you're seeing or how you think you're a good fit for this business. Because ultimately, I'm going to bring this to an analyst and they're going to have the concern. So let's work together. Let's do an addendum. Let's do a business plan that'll show that, show your passion for getting into this industry, or maybe you've been in the industry and you just didn't tell me with your resume. So those are some things too that we're kind of seeing, that we're doing things a little bit different going forward than maybe we did pre-pandemic.
Wow. And so, let's talk about 2023 as we kind of roll in, and, interest rates are, double digits for most deals now. So, what's the best way for people to kind of get into a deal? Is it more down payment, or is it, variable rates? What do you think? What's the best way?
Even with the double digit interest rates, we're still seeing it busy. We haven't slowed down. What we have seen is the commercial real estate market completely drop off. This doesn't really have a lot to do with the trans world guys and girls, because we're just doing straight commercial real estate purchases with our bank. We're doing refinances. That market has dropped off completely. I mean, we have a promo that we have at 6.75 fixed. And even that, it's like last year's rate in today's environment. We can't even get the people, to get, motivated about that. So I think you're seeing a lot of people sitting on the sidelines in terms of adding assets to the balance sheet, like commercial real estate. But we're still seeing it very active for business acquisitions, even in the 10 1/4, 10.5%. But when you get into those larger deals, call it the 3 to 5 million, there's some people thinking twice, because that's a huge difference in the monthly payment versus a $350,000 to $500,000 deal. So it just really depends case by case. But I would bet that there's a lot of people sitting on the sidelines that, this year that weren't last year. They were active and ready to go before all the rate hike. So, we hope we can capture those potential borrowers, possibly as the months go by for this year, and we get later on into the end of this year. You know what I mean? Yeah.
Are specifically your bank, are they looking for sellers to be more involved in the deal, as far as putting in some seller financing?
Yeah, I mean, it always helps. I tell business brokers that, my approach, I don't want to complicate the deal. So if it never was brought up, I'm not going to go bring it in on every deal saying, hey, you got to do seller financing just to make sure I can get an approval. My approach is that I work as a real kind of relationship person with the business broker to kind of consult them and say, look, there's a reason why I will suggest a seller note, and it's two things. If we have a deficiency in experience on the buyer, or they don't have enough for an equity injection. Those two things. So if I got somebody that comes in that's skinny on experience, or if they're skinny on cash for a down payment, I might call up the business broker and just say, hey, I want to get this to the finish line. We're doing this together. And I think, because we have a deficiency in a certain area, we have to maybe consider doing a 5% seller note. It doesn't necessarily need to be on full standby, but something to get to where we have vested interest, maybe a smoother transition with the seller to buyer, making sure that that seller's not just going to leave the keys on the table and go get on a cruise ship after the closing. We would like to see some transition. And that kind of comes back to, I'm married to these clients. The business brokers, they move on to the next deal, but these borrowers will call me for the next 10 years, 25 years in some cases. So,
right.
I gotta make sure we're making prudent decisions and making sure that we're lending money to the right people.
Yeah, we all want the deals to go well, and nobody wants a deal to go bad. As we always say, good deals for good people, and we want those deals to stay good. So, you talked a little bit about the equity injection for the sellers. Has that changed? Has it gone up, or is it, you're still willing to do something at 10%?
Yeah. So, the requirement for the SBA for the buyer is the minimum is 10% of total project costs. That's sometimes we get business brokers that are like, no, it's 10% of purchase price. No, 10% of total project costs. So that means the purchase price, working capital, and any, SBA fees that are in 10% of that. So that is the minimum that we let our borrowers know is the equity injection minimum. However, that there is a more minimum, but it's not always accepted. It's a 5-5 model. So the buyer can come in with 5%, and then the seller can carry back 5%, but it needs to be on a full standby, which not all sellers want to do that. So it will come down to kind of case by case how big the deal is. 5% of a $500,000 deal is different than 5% of a $5 million deal. So all sellers are going to be different. Some are going to be okay with it because they want to get to closing. They want to get, right off into the sunset. And then there's going to be some that are like, no way, I'll sit it out until I get my money back. So those are some of the challenges that, we kind of work through as we're going through the process. Again, we want to stick with what's on the asset purchase agreement that's been agreed upon. We don't want to change anything up, but we do work as a consultant with business brokers to say, look, we might have some headwinds and some challenges based on this structure. Is there any compromise that we can, because at the end of the day, I want to get the deal done. I want you to get the deal done. We want the borrower to have a new business, seller to ride off into the sunset, so on. So I kind of work in that consultative nature to make sure that we're not making anybody mad. We all want to get the deal done so we don't have to relist it, and then have it wait for a new buyer, right? So sometimes those conversations come into play. Not always though, some go very smoothly. It just really depends on the situation, the business broker, the business, and the buyer, So there's a lot of variables in there that I just mentioned, when you're putting a deal together. And then you got to throw SBA guidelines too. You got to make sure it's eligible and, fitting all the boxes. So,
well, let's talk about, kind of moving forward. I think, my prediction for 2023 is, I think we may have some headwinds on the financing, which again, inflationary pressures may start lowering the profits of those businesses, or at least stabilizing the profits. So perhaps the prices might stabilize. I don't think they're going to go down. Again, I don't think they're going to go down like they did in 2009, 2010. We are not there as an economy, but I think we have some headwinds as far as being able to borrowing power and being able to, coverage, debt service coverage in the deals. So I think the deals are still going to be solid, but the prices might kind of stabilize. But I do think more sellers are coming to the market. And I don't know if you've seen that kind of uptick yet, but we're starting to see it a little bit. And I think 2023, as far as deal volume, may increase again.
Yeah. I'm bullish that it's going forward. I don't see how they could do any more rate hikes, but you never know. And I think this is going to be the new normal. It does come with some sticker shock, right? You see a BizAc at 10.5% or whatever it is. We hope that it's going to come down a little bit to get it under that mark, so it's not from an optics view so much, right? But I think everybody's used to that low rate environment under 5s for so long that it's tough to absorb the new normal, I think.
Well, when I had hair like yours, we were doing 10 and 12% deals. When I first got into this business, the interest rates were well above 10. I mean, they were 11 and 12, and people were still taking the money. For BizAcs, perhaps commercial real estate. You're right. Very, if you're got a 5% cap rate, that's some slim margins. But in business, for the most part, you're buying at a 20-25% cap rate. For the most part, there's still room in there for debt service and still being able to work in the business and make money. So it's still, like you said, a good deal to get SBA financing for your business, even if it's 10 years. So
it's still cheap money. You know what I mean?
It's still cheap money.
Look at the alternatives that are out there. It's cheap.
Right. So I think SBA lending, again, is still, like you said, a good deal. So I think we're still going to have some action. Banks are in good shape. The balance sheets are in good shape. I think people are going to still want to get businesses and get financing through the SBA. So I'm pretty bullish on this year. There's always things that could pop up later on in the world, but we've always kind of worked through those kind of events out there in the world, whether it's an economic downturn or a new wave of coronavirus, whatever it is. We always kind of seem to get through that. And you mentioned early in this process, Transworld does have a big contingent in Florida, but we're seeing other areas of the country still growing too. Yeah. And so those areas will continue to grow, I think, and thrive. So, we're looking to do more deals. So
Florida's booming. I got to tell you though, everybody wants to be down here. And it seems like, what I've noticed as a trend, everybody wants a service related business down here. Service related businesses with reoccurring revenue is where it's at, and having multiple of them. So those are trends that I've seen over the last year to 2 years. We're getting people from the Northeast calling, hey, what businesses do you have available type down there? Is financing down there? Because we want to get out of the Northeast. We want to get down into Florida, but we don't want to work for the man. We want to have our own business. So, we're seeing that aspect of it as well.
Yeah. Well, we will, I'm sure, have continued influx of people into Florida. I think it was 300,000 plus people moving to Florida. And that's not, typical. I've heard for years that we have 1,000 people a day moving to Florida. So it's not untypical for people to continue the growth. I think we'll continue to see that. And, again, we do cover the whole country, and so do you. So we see other areas of the country that are continuing to grow. I think one of the interesting things with after the, coronavirus and people working remotely, I think you're seeing a lot of rural or even second tier cities starting to get more popular because, again, the spending power of people being able to live in a bigger house with a bigger yard, with perhaps, different kinds of schools. People want to move to those places, and now they can work, know. So I think that'll continue too.
We're even seeing it, the new construction homes are, they're shaping them around having an in-house office rather than, people used to going into the major cities to, going to an office building and stuff like that. Even our bank has really gotten, we still have to where we come in like officers meetings on quarterly just to have that synergy. But for the most part, I was full remote before the pandemic. So it's pretty normal for me, but for a lot of other people, it's been pretty amazing for switching over to that. The efficiency that they can have to where they're not having to commute and stuff like that back and forth. So it's definitely a little bit different than it was pre-pandemic, I can tell you that.
Well, I think I'm excited about 2023. I think it's going to be exciting. 2022 was off the hook, like I said. So, and we're excited to have you as a partner at Transworld. We really appreciate it.
Thank you.
And Jack, what's the best way to get in touch with you if people want to talk to you about loans?
My cell phone, 727-480-4281. That would be the easiest way. They can get a hold of me on my first and last name, jack.Postregna at BayFirstFinancial.com. Happy to talk with anybody that has a question, maybe about SBA, or if they want to just run a deal by me, I'm happy to help.
Yeah, we'll drop that in the show notes to make sure that people can spell your last name.
Yeah,
I feel you too. I feel you too. I have that too. So great having you on, Jack. Thank you so much for your continued partnership, and we look forward to doing lots of deals with you this year.
Thanks, Andy. Likewise. Thank you.
Hey, Jessica, you know what time it is?
Money time?
Almost. It's time for listing of the week.
Hey, welcome back, everybody. It is listing of the week, and we are with the listing king, Mike Shea from Transworld Business Advisors of Florida. I'll just make it Florida because you're all over the place. But Michael, what's the latest listing that you got that you want to tell everybody?
So I love this business, and we classify it automotive, but it's not really. Well, it is automotive, but it's not. I'm turning wrenches. This business repairs rims. So I know my wife has had a Cadillac, which I now drive, and for some reason could never not scratch the rims on the Caddy. And that's not, I think lots of people have that issue. So this company,
we all do. It's all good.
This company takes the rims, bangs them out, refinishes them. So, keeps them nice and clean and pretty. And really although it does do some B2C, it's all B2B. They got 65 commercial customers ranging from automotive repair shops to dealers to commercial fleets, 2 vehicles, roll up on job sites, pull that out, get it on the lathe, do the repair and the refinishing, send it back out. This business was listed with another broker, got nothing, no action. How it was listed, books, owner approved, had perfect books. He was a little creative with his cash. We got him counseled on that. He re-amended his return. So check out the margins on this. $365,000 in sales, $172,000 in cash flow.
Wow.
There is no overhead. It is priced at $279, which is again less than a 2 multiple. Willing to do seller financing, and I got SBA financing on this as well.
Excellent. It sounds like a great deal for someone. I mean,
you got to look at those businesses that fly under the radar screen. This is not something someone would look at, but that means there's no competition in that business. I've never seen a business that does this, but he's got 2 staff out there. He's got a really tiny shop, but most of his work's done on the road.
Yeah. Sounds like a great deal, even for a young person. Who knows, right?
Yeah. Yep.
So, Michael, what's the best way to get in touch with you if somebody wants to talk about it?
The cell phone's 321-287-0349, or you can hit me on email at mike@tworld.com.
Great deal. Get on it.
All right. Thank you, sir.
Thanks for tuning into the show today. If you like the podcast, share it with your friends on social media. And don't forget to subscribe and leave us a review on your favorite podcasting app. If you have questions, would like to appear, or have suggestions for topics for the show, get in contact with us through our website, thedealboardpodcast.com.